The rough and tumble world of resource sector takeovers got even more interesting this week when ASIC swept in and stopped 2 senior Chinese executives from leaving Australia and froze their bank accounts while investigations into insider trading continue. ASIC has alleged that there'd been irregular trading on an enormous scale in the lead-up to takeover bids for both Bannerman Resources and Sundance Resources in July this year, with both bids launched by China's Han Long Mining. As Neil Woolrich reports, ASIC has a patchy record in making criminal charges stick in insider trading cases as it struggles to get over some tough legal hurdles.
From Wall Street billionaires to celebrity Australian brokers and TV stars, there's no escaping the media glare when an insider trading scandal breaks.
Can you just tell us what you're doing for a living these days?
Yeah, spending my time in court.
Insider trading laws are very complex, as are the transactions themselves.
I think it's reasonably widespread. I mean, you just have to look at the number of queries that go across to ASIC on a weekly basis.
This week, the local market was rocked by news the Australian Securities and Investments Commission is investigating share trading in 2 junior miners, Bannerman Resources and Sundance Resources, which are both subject to takeover bids by China's Han Long Mining.
From ASIC's perspective, it certainly is a kick up into the big league.
Obviously, the board of Han Long have sent a very high-level person to come and rescue those talks with both companies. I think that says a lot about the seriousness that Han Long have with regard to this issue, and they want to try and mend perhaps some damage that's been done.
The New South Wales Supreme Court has frozen assets and placed travel restrictions on Han Long's Sydney-based Managing Director Stephen Zhao, a Han Long Vice President Calvin Zhu and an employee Fan Zhang. 2 other individuals and a company have also had their assets frozen by ASIC.
It is very significant from their point of view for a couple of reasons. The first is they've moved very quickly on this. The trading is alleged to have occurred in early July. They've got freezing orders in place already. The investigation is still on foot, but they would feel that they have a lot at stake.
ASIC's investigations are continuing and no charges have been laid, but it's alleged the 5 individuals made nearly $2 million profit trading shares and contracts for difference, or CFDs.
ASIC has very, very strong investigation powers, and they can go and seize the trading records of the CFD companies as well. So, and each CFD has to be backed by a share transaction. So anyone who thinks that CFDs are a way to avoid ASIC are fooling themselves.
In the days before the takeovers were announced in July, Bannerman's shares more than doubled, while Sundance's jumped 70%. But ASIC's investigation now casts a shadow over the bids.
From our point of view, we see the initial bid, as being a little bit lowball. And I think the market has been saying for a while now, even before these allegations surfaced, that the market was relatively sceptical as to whether that bid would actually be successful.
Justice Barrett in the New South Wales Supreme Court said ASIC had shown a solid basis for its investigations. The question now for the corporate cop is whether it can make charges stick.
ASIC is getting more sophisticated. Its investigation techniques are becoming increasingly more complex. They have an ability to survey the market on a daily basis. They can survey it instantly, and they can see changes in volumes and prices very quickly.
Senior counsel Greg Lyon has written the book on insider trading in Australia and also appeared for ASIC in several high-profile matters, including the case against Steve Izard. At the time, ASIC came under fire for not pursuing criminal charges against the media personality. Instead, he was fined $390,000 and banned as a company director for 10 years under civil penalty provisions for breaching his duties as a Telstra director.
ASIC is caught in a bind, but generally, when there's high stakes involved and when there's very overt contraventions of the Act, they'll prefer to use criminal proceedings.
For many years, there have been suspicions that insider trading is rampant on the Australian market, although there's little hard data to back up that case. One study that's now 3 years old showed the average share price of a takeover target rose by 10% in the 40 days before a bid was announced. But in these days of heightened volatility, it's perhaps harder to prove whether those sorts of share price spikes are caused by genuine inside knowledge or just market gossip.
Anyone who is an officer of a company or an employee or a consultant, who buys shares ahead of a sensitive announcement is an idiot.
Since 2009, ASIC has claimed a dozen insider trading scalps, with all but one of those offenders being handed jail terms.
Well, if you look at the last couple of years, they've been pretty successful. They've had, quite a few high-profile convictions, and basically once they get you and get you in front of a court, their success rate's about 95%. So, they're doing okay. The hard thing all the time is proving that you knew something.
Hanlong Mining's Australian team might be sweating on the outcome of the investigation into their share trades, but the heat is also on ASIC to secure meaningful penalties in a case that some market watchers think should be an easy win for the corporate cop.